If you would like a quantitative and definitive way to determine which projects to move forward with, you've come to the right place. So net present value is what you want to calculate. So net present value, it just essentially means the value in today's dollars once you figure out future costs and future revenues, salvage revenues, rates of return, and things like that. And that sounds complicated, but it's actually not too bad. So with net present value, you can take projects of different costs and different payouts and different lengths of times and all sorts of things. And the one, if you have limited resources, the one that gives you the highest value in today's dollars is what you want to go with. Or perhaps it'll actually end up showing you that you should go with neither, or perhaps that you could go with both if you have the resources. So if you want an easy way to calculate net present value, you want to use either something like Microsoft Excel, Google Sheets, or most other spreadsheets have it built in also, or a financial calculator. So I'll assume you're using Excel or Google Sheets because just about everyone has access there. If you don't, get a free Google account and you can use Google Sheets. But first, you need a pretty good idea of what's going into each project. So how much money would it cost in the initial costs? Are there initial payments? Are there ongoing costs? If so, over what periods of time and at how much at which points in time? What's the total time frame look like? Is there any machinery or other salvageable or resellable parts at the end? When will it realistically deliver direct profits or reduced costs? And now you want to map that over a consistent timeline. So if we're talking about Excel, it might help to visualize and put in each step there. Now you need to know what the time period is, though. Usually it'll be monthly, but you never know. As long as you keep the periods of time consistent, you're okay. It could be yearly, it could be daily, whatever you like there. So to calculate net present value, you need a few other values, though. So you need to know the total number of periods, like I just mentioned, and you have to have a certain value for a required rate of return or discount rate over time. If you're a part of a big company, you can probably get that from someone in your financial department there. If not, some things you might want to use are just maybe your business's growth rate, because that's just if you invested in your business in general, that's what your money is returning. Or you can use whatever percent of return you feel makes the most sense for you, whether that's a safe return on cash that accounts for, maybe inflation or anything like that. But just make sure your investment percentage is tied to the period time. So you can't use, let's say, monthly periods, but then yearly interest rates. You need the interest rate for that same period of time also. So make sure you have that. And then what you need also is there any value at the end of the project? So maybe you're buying machinery or computers that you can resell or salvage, or at the end of the period of life, it's probably not worth $0. So what is that? So the function for Excel and Google Sheets, they're both NPV. So if you type in $NPV, it'll tell you what to input. And if you don't have different cash flows and it's pretty straightforward for the particular tech project and the payments or payouts are consistent, equals PV might be a little bit easier for you. But if the value comes back in today's dollars as a negative, you definitely don't want to move forward with that project. If the project isn't a sure thing, you want to divide that net present value number by the odds of success. So if there's only a 10% odds of success, you multiply that by 0.1, or 50% 0.5, and so on and so forth. If you want to be really fancy and really precise there, you would calculate both what would happen if you were successful and if it failed, and do a weighted average and combine them both there. And if you're not limited by resources and both projects have acceptable outcomes based on the NPV values you get, you should actually pursue both. If you'd like more in-depth on this, just go to Google or your favorite search engine and type in Excel NPV or Google Sheets NPV and read the results. It's pretty straightforward to learn. It's super valuable, and there's tons of information out there. So let me know if you have any questions, and have a good one, everyone.